Good day, grade 12 learners. Welcome to today's accounting lesson. My name is Mrs. Bella Makgetla, and this lesson is brought to you by the Northern Cape Department of Education in collaboration with Pagama Research and Development. Now, on today's lesson, we will be looking at financial statements, specifically the statement of comprehensive income. Now, this is what you need to know by the end of this lesson. You must be able to understand the basic concepts of financial statements. You must be able to prepare the statement of comprehensive income using the appropriate financial information and applying the format. Then you must be able to understand these adjustments, the bad debts recovered, and trading stock surplus or deficit. Okay, so you need to understand what is happening in these adjustments, how you record it in your statement of comprehensive income. Then the knowledge that you need to already have or already understand, you need to know what financial statements are. Now, financial statements are formal records that summarize the company's financial performance and position to provide a very clear picture of its financial health. So where is the company actually standing at that particular moment? Then you also need to know what the comprehensive income statement is, right? So what is a comprehensive income statement? That is the statement, right, that includes all income and expenses that affect the company's financial standing over a period. So in the income statement, we are looking at specifically the income and expenses that the company has earned or incurred in that particular financial year. Now, we are using the matching principle whenever we are doing the comprehensive income statement because we are matching what we have earned with the financial year, whether we have received the money or not, whether we have paid the money or not. For as long as it is for this financial year, we have to record it in the statement of comprehensive income. Okay, so let us quickly do a baseline activity where you have to calculate the correct bad debts amount in the statement of comprehensive income. All right, so I'm giving you 3 minutes. Let's quickly go to the information. 3 minutes to quickly complete this. See you now. Welcome back, grade 12s. Now, let's quickly analyze the information that we have before us. Now, it says there the balance and totals of 31 March 2019, right? They gave us our trial balance or the balances and totals list, right? We are dealing with bad debts transaction. Now, the reason why I'm showing the debtors control and the bad debts is because I want to explain to you that when you are dealing with the debtors control are people that still owe us, okay? They owe us, so this is an asset. And then the bad debts is an expense. Now, these are the people that owed us money because they could not pay us for whatever reason. They were moved to the bad debt, so they no longer in our debtors control. We took them out and put them into our bad debts. We are saying that we are no longer expecting that money from them anymore because, well, we can't expect them to pay us. Okay. Now, this is the transaction. The transaction says a debtor S Magnum was declared insolvent, right? So this person is our debtor. Are we following? So they are here. They were declared insolvent. His estate paid 2,000, right? So they paid 2,000 of the debt that is in debtors control, which was 20% of the debt. The difference must be written off as bad debt. So the difference is still in our debtors control. According to us, that person still owes us. However, because now they have been declared insolvent, we can no longer expect them to pay us. Okay, so whatever amount is still outstanding after they have paid the 2,000 is the amount that we can't receive anymore. All right. So what are we going to do? We need to find out the difference. How do we find out the difference? We first say they gave us an amount, 2,000. What does this 2,000 represent? They said in the information that the 2,000 represents 20% of the debts. What are we looking for? We are looking for the rest of the money that is still outstanding because the 2,000 is already accounted for. Okay, so what am I going to do to get to the amount that needs to be written off? The amount that needs to be written off is 2,000 multiplied by the 80 because out of 100% that Magnum owed us, he paid 20%, right? So how much is still outstanding? 80%. And how much in rands is the 80%? And that is what we are calculating. So we are going to say 2,000 multiplied by 80 divided by what we have. So it is the 2,000 multiplied by what we want divided by what we have. Now we find, and that will give us our 8,000. Now how do I record this? Now, this transaction involves two accounts. You are taking the money out of the debtor's control. So where is our debtor's control? Our debtor's control is in our trade and other receivables. So you are going to say the debtor's control amount, right? Trade debtors. And then you are going to subtract the 8,000. Now we fine, because we can't expect that money anymore. And then the other account that it's affecting is the bad debt. We are taking the 8,000 from the debtor's control and we are putting it in our income statement under expenses, and our bad debt is increasing. So every time you have to write off a debtor, you have to increase your bad debts because the expense is becoming more. We are losing that money. We are not going to receive it. So then you add the 8,000, you add the amount that's from the trial balance with the 8,000, and it will give you the amount that goes in our income statement. Okay, now, which is the bad debts recovered, right? Now, the bad debts recovered refers to a payment received from a debt that had previously been written off. So, we have removed this person from our debtor's control. We took them to the bad debt account. Okay? Now, we are no longer expecting the money from them. They are no longer part of our business. Then randomly, the person that previously owed us, that we are no longer expecting money from, comes and makes a payment. Were we anticipating that payment? No. However, they paid us, and therefore we will record it under the income section because that is an income that we are receiving. So what are the accounts affected there? There will be two accounts. It will be the bank because we are receiving the money, and it will be what? It will be the bad debts recovered. Do you see that there's no part where I'm dealing with debtors control? So whenever there is a bad debts recovered account or transaction, know that we are not dealing with debtors control. It's a CRJ transaction, and we are recording, obviously, bank is involved because the money is coming into the bank, and the other account is a bad debts recovered account. Okay, then we go on to the next the next definition, the trading stock deficit. Now, trading stock deficit occurs when the actual physical stock, the one where you actually counted, is less than the inventory in the trial balance. That will be an expense. Then, your trading stock surplus. Your trading stock surplus refers to when the actual physical stock is more than the inventory trial balance. So in the trial balance, you will have 100. Then in your physical stock, you count 120. Now you are gaining 20 more or 20 rand more of the stock that you had actually not anticipated. Therefore, it's an income. Okay, so that is the story between our terminology. Now, let's go on to our statement of comprehensive income. Now, statement of comprehensive income, obviously at the top, we have our gross profit. How do we calculate gross profit? Sales less cost of sales. It's very important for you to know this because this is operational marks. Okay, then we have our other operating income that will consist of all the other income that we are going to receive. If we receive a discount, then we record that, the rent income, profit on sale of an asset, and so forth. And then we add everything in this block to get this amount of the total of the other operating income. That is also an operational mark. You add your gross profit with your operating income to get your gross operating income. This is your gross, okay? So then it will give us 68. Then we move on to our operating expenses. We are going to add everything together in our operating expenses. You don't have to put a negative sign over here, grade 12s, because when you sum this, it will give you a negative amount here. So remember to put the brackets when you put the total. This is just an elaboration of the calculation. And you will see that we've got our bad debts and bad debts recovered. Okay, we've got our trading stock deficit. That's also an expense. And if we have a trading stock surplus, it will be under operating income. Now, I want to just talk about our net profit because when we get to our, let's just go back here. When we get to our operating profit or loss, what happens then? We are going to then start calculating our net profit, okay? So what do we do when we calculate our net profit? So we have our operating profit as the previous slide has indicated. Then we deal with note number 1, which is the interest income note. Interest income is all the interest that you're going to receive. Interest on fixed deposit, interest on a favorable balance, and so forth. So all the interests you're going to add together to give you this amount. In this case, we have 600. Then what do? You say your operating profit plus your interest will give you your profit before interest expense. Do you see that? That will give you 58,600. And then you have your interest expense. Your interest expense, you are going to have all the interests that you have incurred, and that is note number 2. The interest on overdraft, interest on loan, and so forth. So you're going to add all the interest together to get this amount. And remember, this interest is an expense, so it must be in brackets. Then we continue on going down, saying that the profit before interest expense, and we subtract our interest expense to get our profit before taxation. Now, this is the new part that is being added in the grade 12 content. From grade 10 and 11, you've just been dealing with the income statement until here. After that, you have your net profit after interest expense, no problem. But in grade 12, we have a new phenomenon, which is the tax. So the income tax must be charged. So this is your profit before income tax. And then you calculate your income tax. Now, this income tax is the must be, the income tax that you should have paid this year, irregardless of how much you paid. So what they normally do, or they provide the provisional payments in the trial balance, and then they have an adjustment indicating either the total income tax, or they tell you how much is still outstanding, or they can tell you that the amount that we have paid, maybe we have paid in advance when it comes to income tax. Then you have to do a calculation that is only relative to this financial year. So the provisional payments is what you've paid, plus what you owe will give you your income tax for the year. Okay, so once you've calculated your income tax, you are going to say your profit before income tax, subtract your taxation, and then it will give you your net profit after tax. And that is the final answer. So these are operational marks. Please make sure that you know this part or this aspect because it's got a lot of operational marks and you will truly benefit from it. Make sure you know your format grade 12. That is where your principal marks are or your operational marks are. Please don't lose unnecessarily marks because of the fact that you don't know your format. Okay, then let us quickly talk about bad debts. We've already covered bad debts generally. We said that we're writing off a debtor, right, to bad debts. And that means that we need to account in this. We are removing the debtor from the debtors control account and writing the debtor in our bad debts account. So we are taking them out of here, which will obviously be a negative, and then we are going to add them to our bad debts. Or sometimes they might have made an error, then you will do the reverse. So you must be ready to work to do it accordingly, write them off. And you must also be able to interpret when they tell you that they made an error. They should not have removed that data. Then you need to do the reverse. Okay, so then let's move on. How do we do that? We debit our bad debts, which is an expense, and then we credit our debtors control account, and this is our asset. Remember, assets become less on the credit side, hence why we are crediting our debtors control account. Okay, now let's quickly do an activity. It says calculate and record the correct bad debts amount. There it is. So 2 minutes to quickly calculate this. See you in 2. Welcome back, grade 12s. 2 minutes. So let's quickly go through it. Remember what we said about bad debts? We said we are removing them from our debtors control and then we are adding them if we have to write them off. Okay, so let's quickly read the adjustment. The adjustment says 32,400 from the estate of an insolvent debtor was deposited into the bank account of the business. This represents 75 cents in the rand. The balance of his account must be written off for the financial year. So now we need to analyze, or we need to find out, look at what information do we have. We already know what we need to do. We need to write off this data, right? So we have 32,400, and then they told us that this represents 75% or 75 cents. Now you will see that in the baseline activity, the example that was given was based on percentages. Now, the examiner can give you in terms of cents. Now, don't worry, don't stress, because cents are out of 100, percentage is also out of 100. So, we are dealing with a very similar situation. Okay, so then we go on to say 32,400 represents 75 cents. Then we can quickly use our calculation of what we want divided by what we have. So we need to write off the remaining, the outstanding amount, okay? Because we received the 32,400. Then we will say 32,400 multiplied by what we want. We want the 25 divided by what we have, which is the 75. So then it will give us 10,800. What are we doing with this 10,800? We are saying that in our income statement, we will add the 10,800, no problem. And then we add the trial balance amount with the 10,800 and it will give us our 206,800. So if we had to do it in the statement of financial position, we would go to trade and other receivables. Now this is under current assets, right? Current assets, trade and other receivables. Our debtors control given to us, let's quickly go check, given to us was 2740. So we'll say 2740 000, subtract the 10,800, 800. Why am I not removing the 32,400? Because the examiner did not say it was not recorded. Unless the examiner specifically indicates that the transaction was not recorded, then it means that I must just do the transaction that I'm required to do. If the examiner says the transaction of 32,400 was not recorded, then I can also subtract the 32,400. Are we clear? Okay, now let's move on to the next aspect, which is the bad debts recovered. I've already highlighted that receiving money from a debtor that was previously written off. Now, this person is no longer a debtor. So it's no longer a debtor. They were previously written off. Okay, so how do we record this transaction? We record it by debiting our bank. Remember, debit means that we are receiving the money. So the bank received money. Why did the bank receive money? Because there was a bad debt that has been recovered. This is an income account. So those are the two accounts that are affected. All right. We are not putting our debtors control anywhere. Okay. It's only the bank and the bad debts recovered. That's it. Okay. Then how do we show it in our comprehensive income statement? We are going to take the trial balance amount. We are going to add the amount that is supposed to be added there, the bad debt that was recovered. So if we recovered 1,000 rand, then we are going to add 1,000 rand. Now, the one thing that I need you to be aware of, this transaction cannot just always be straightforward the way it is. Sometimes it can tell you that there was an error. Instead of putting the amount in our bad debts recovered account, the bookkeeper put it in our debtors control. So that means that we know better, because obviously we are auditing the books, right? We are looking at whether the bookkeeper did the right thing or not. So then we know that it should have been the bad debts recovered account. So what are we going to do? We are going to subtract it from our debtors control because it does not belong there, right? Actually, we need to add it back in our debtors control, and then we also need to add back our bad debts recovered because it's an income. Okay. So that means that you're going to debit your debtors control and credit your income account, which is the bad debts recovered. Because initially, if the bookkeeper recorded it in the debtors control account, it means that the bookkeeper might have reduced the debt. However, in this case, it cannot be that way. We have to change the amount from the debtors control, and then we take it to our bad debts recovered account. All right, so that is the way to approach that question. So it can either be a straightforward question the way I've presented it, or they can tell you that the bookkeeper made an error and then you have to fix the error. How do you fix the error? You add back the amount that the bookkeeper removed, and then you add the correct amount into the bad debts recovered account. Okay, so let's quickly do an activity. 2 minutes to quickly complete this activity. Here's the information provided. So you are going to calculate the correct bad debts recovered amount. Okay, 2 minutes. Welcome back, grade 12s. Let's see. So over here, we are looking at our trial balance. We've got the debtors control, bad debts, and bad debts recovered, right? And then the adjustments says the following, or additional information. 1,800 was received from a debtor, okay? J. Misting, whose debt had previously been written off, okay? The bookkeeper incorrectly credited the amount in the debtors control account. So this is an error. It was recorded, but the bookkeeper made an error. So what do we need to do to correct this error? Okay, it's very simple. In our income statement, we do the right thing. Add our 1,800 in our bad debts recovered because the bookkeeper did not add it. Okay, then in our statement of financial position, right, under trade and other receivables, you have trade debtors, and then you will take the trade debtors amount given to us, which is 578,000, 578,000, and then you are going to add it back 1,800. Why? Because the bookkeeper credited it. If you read the additional information, it says that the bookkeeper credited it. Where is it? Credited. So then what do we need to do? We need to add it back because credit means it's a negative. Remember, this is an asset. So she subtracted 1,800. What do we need to do? We need to add back the 1,800. Okay, so that's how we're correcting that error. All right, so let us then look at the next aspect. Our next aspect is our trading stock surplus, right? We said that the trading stock surplus is when the physical stock count or the stock on hand is more than the trial balance amount. So think about it. You have recorded only 100. You said you've got stock worth 100 Rand. But when you went into the storeroom and you actually did a physical count, you counted the stock 1, 2, 3, 4, 5, and you discovered that the stock is actually worth 120. So the amount of physical stock is more than what we have recorded. So then how do we account for that extra 20? That extra 20 is an income that we are receiving now in our business because we have more than we actually had recorded. Okay, then how do I record this in my income statement? In my comprehensive income statement, this is the way I'm going to record it. It's a surplus, right? So surplus is an income. So it means that I'm going to record it under my operating income. And then I'm only going to record the surplus, the difference between the two, the 20, basically. Okay. Now, the most important part, you must always show your workings. How do I then record this in my comprehensive income? In my comprehensive income, I'm going to record it under expenses because I'm losing that amount. Okay, then it's a deficit. You must write whether it's a deficit or a surplus. And then I'm going to take my trial balance amount plus minus my adjustments. Okay, and then I will subtract my physical stock. Then I will get my loss. That is a 3 out of plus minus 5, sometimes 6 or 7 marks, depending on the way in which the examiner is going to test this question. But be prepared, grade 12s. Know what is expected from you. Okay, now, when you are dealing with the trading stock deficit, trading stock surplus, how does it then affect your statement of financial position? Your statement of financial position is affected as follows. Basically, you are going to go to your current assets, and under your current assets, you are going to have inventories. Now, inventory note is recording any stock that you have on hand, meaning what is left. Okay, so what are we going to use? We are going to use the physical stock amount. So in this example, we said that our physical stock is 120, our trial balance is 160, and then we said we are losing 40. Okay, so that means which amount am I going to use? I'm going to use the 120 plus my consumables on hand. Okay, consumables on hand, we'll talk about it, but consumables on hand is any stationery packing material that you have on hand, the one that you did not use. Okay, so let us quickly do an activity then. So I'm going to give you 3 minutes to quickly complete that. Okay, see you in 3. Welcome back, grade 12s. Let's see what you have been up to. Now, according to our trial balance or our totals, our trading stock is 364,200. And if we look at our information, we will see that our physical stock count says we have actually 334,500. Now, looking at our definitions for trading stock surplus and trading stock deficit, I'm going to start with the surplus. The surplus is when the physical stock is more than the trading stock. Do we have that situation right now? No, we don't have that, grade 12s. We have a situation where our physical stock is less. So then when it's less, it's a deficit because we need to reduce. We must minus this amount so that it can give us 334,500. And the moment we have to minus something to get to this amount, then this is a loss. It's a deficit. Okay. It's a deficit. Ooh, deficit. Yeah, that's the one. It's a deficit. So then we cannot just at the onset assume that it will be a deficit though. So whenever you are dealing with this question, you must know that you need to take the additional information into consideration. So it says that a credit invoice for 40,800 was not recorded. So this means that this amount that is in our trial balance is not the correct amount. We omitted a particular transaction. So before we can actually conclude that it's a deficit, we have to first adjust this amount so that we see that it's going to be a deficit or a surplus. It says goods were marked up at 70% on cost. So then it means that we need to calculate now how much our stock left or how much of our stock was actually sold because it's a credit invoice. Okay, so the big thing is that we need to adjust this amount. All right, now let's quickly see how to adjust that. So we will say 40,800 multiplied by 100 over 170. Why are we calculating this? Because they gave us our selling price and we record our stock at cost price. So our stock is at cost price. So we need to find out how much the cost price is. So inventory or trading stock is always at cost. Okay. So 24,000 worth of stock was sold. And we fine. So then we are going to say from the stock, we are subtracting the amount that we sold. And then this will give us 340,200. This. Then we can then compare it with that amount. Do we have to still reduce that amount? Yes, we still have to reduce it so that it can be 334,500. And that is why we say it's a deficit, because we still have to reduce it. Okay, so then we will say trading stock deficit under operating expenses. Then we take the amount in the trial balance. We subtract the 24,000, okay? And then we subtract the physical stock, and then we get our 5700. That is the difference between the 340,200 and the 334,500. Okay, but you have to show your workings. How does this affect my statement of financial position? Not really. The only thing is that we know that we must use this amount to record under inventories in our current assets in the statement of financial position. Okay, now there's an activity that I've prepared for you for homework. Please see your teacher to provide that activity, and you will see that there are different types of questions that can be addressed or tested when it comes to these type of topics. And I believe I've covered most of the expected outcomes. So please try your best, and then surely you're going to do good at it. Okay, now let's quickly summarize what we talked about today. The things that you need to know in order for you to maximize question 1, because we are dealing with question 1 over here, right? And then, so you need to know your format, first things first. If you don't know your format, you lose out on operational marks. Okay, then when calculating trading stock deficit or trading stock surplus, you have to have the trial balance amount. You need to plus or minus adjustments, okay? And then only you subtract your physical stock count, and that will give you a minimum of 3 marks if you actually show the workings. Okay, then remember, we cannot just assume that it's a deficit or surplus by just comparing this at first hand. We need to see the impact that the adjustments are going to have to the amount that's in the trial balance, and then only we compare the two. Then, thirdly, you must be able to correct an error. So meaning that you need to subtract it from the incorrect account and add it to the correct amount. Okay, now you must always show your workings grade 12. It's very important for you to optimize the amount of marks that you're going to get. Okay, so far we've covered trading stock deficit, trading stock surplus, we've covered bad debts recovered, we've covered bad debts. Okay, so those are the possible questions that can be tested in your statement of comprehensive income. On the next lesson, these are the things we're going to be looking at. We are going to be looking at the calculation of the net profit after tax structure. Then you must also be able to do adjustments that are relative to the correction of the net profit after tax. So this is another type of way that the examiner can test question 1. So instead of testing the income statement, they can test the net profit after tax or correction of the net profit after tax. So it's another aspect that we need to look into. Now, with that said, we'll see you in the next lesson, grade 12s. Goodbye. Thank you.